Greetings everyone, and welcome back to my YouTube channel. Today I'm going to be talking about directional bias. Ever wondered why your trades fail despite good setups? That's because it's often missing directional bias. So in this video I'll tell you more about it. Let's dive straight into that. So directional bias is the likely direction of the market. As we all know, the market moves in three phases. I should call them directions anyway. We have the bullish phase, creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and so on and so forth. On the bearish phase, we have price creating lower highs and lower lows, lower highs and lower lows, lower highs, lower lows, lower highs, and so on and so forth. And we have the neutral phase, which is the consolidative phase, whereby price taps into resistance back to support, resistance back to support, resistance back to support, resistance back to support, and so on and so forth. So we did three phases. I wouldn't expect anyone in a bullish market to start selling the market. Always and always follow the trend. The trend is your friend, like they always say. So directional bias literally gives us the confidence and the clarity that the market is headed in that direction for a long time, because a directional bias lasts for a long time. It can even last months, it can last weeks, depending on how you caught it. Yeah, so I usually use 2 time frames for identifying my directional bias, and that is the daily and 4 hour. So to take trades in an uptrend, I'm going to use this as an example. We'll have something like this. We'll have price retracing back down, so that you take your buys. To take out this level here, to take out this level here, to take out that level here. And once you find another POI, remember we are in a bullish market. The directional bias is telling us that the market is going up. So we'll get our retracement here. Once we've taken out this high, we'll get our retracement here. And what is being generated here, remember now we have a big time frame POI around these levels here. We have a big time POI around these levels. So we'll have resting liquidity around that area there. And what will the market do? The market will come to take out that liquidity. With the initial hour buy. And this will be taken out. So on and so forth. So same thing with the bearish market. I wouldn't expect you to buy here. once you figured out that we're in a bearish market, I wouldn't expect you to buy here. Rather, I'd wait for you to literally find the POI in this, around these areas here, around those areas there, and you sell the market to take out this. Note that this trend line, these points here, the take profit points will be on the smaller time frame, so they'll literally have to take them out. So what you have to wait for is a POI. If it's on the daily or the 4-hour, break it down to the small time frames and short the market to take out all this liquidity here. So same thing with a consolidative market. It's very tricky to trade, but most people that know how to trade it will do the same, because there's always lying liquidity up here. Liquidity is always lying up on these levels here, and down here in these levels here. So here you can buy or sell the market. You might have liquidity lying down like this, being created here. Then this is the liquidity. Then it will be taken out. It will be taken out by the sales here. Same applies to the bullish market. That will take out the sales that happened here. So that is the concept of directional bias. Always and always know where the market is headed on the big time frame. That will give you so much clarity and confidence to take your trades. So we are going to go through it on the charts. I'm going to use the Bitcoin chart. So let me start from the daily. You can see that with the daily time frame, let me start with this bearish move here. We had this high here, we had a low here, we had a high, we had a low, a high, a low, a high, a low, and finally got a shift. And finally market shifted structure here. So what do we expect? Remember, this is the daily. So this was in Jan 2025, and the last low happened in April. So the direction of the market for that run, for this whole run here, happened for basically like 4 months. So that was the direction, and anyone who was trading in these levels here had to take sales up here. Sales, until they exhausted this. There was some little liquidity here. So once market shifts structure, which happened around these levels here, it's the big time frame, of course. Doesn't give you the clear entries, but I'm just showing you the concept of directional bias. We will have this lower high point as a take profit. We'll have another lower high point as a take profit. We'll have another another take profit level up here. We'll have another take profit level up here. And guess what? Once you get the shift, around here and confirm your entry, the market will take out all this liquidity. All this liquidity here. So this will be your take profits. And this happened on that daily. So going down almost took 4 months, but taking these profits here was like only 2 months. And you'll find so many opportunities since this is the daily time frame. So let's go on. Once we had that shift and that was taken out, we had the market creating the bullish move. Remember the direction, the bias changed around this level here. We now know that we are bullish and everything we are taking is buys. So the buys kept on going from this low here. We had this high, low, high, low. We had a high here, a low here, a high, a low, a high. And for some reason, we refused to create a lower high to push the market for a continuation. So this is the first sign for you to know that there might be shift in the market. There might be shift in the market. Since we failed to respect this law and we broke below it, that was the first sign. You should be patient enough to know that right now I know the direction of the market, but I'm seeing evidence that we might have a shift very soon. So the shift didn't happen there. This was August last year. Then the last day of August had a retest of this level. Then price continued up, creating more highs. And this was the final high, which is the all-time high. Once that happened, price broke below in November. Price broke below and retested that level. So someone who had their eyes on the market knew that, oh, we already had a shift. Somewhere we had a shift in the market. It had started, but this level was respected. But after those two levels, because we had a third touch here that was respect, but this break here confirmed that we were now bearish. So this neckline here, this whole neckline was taken out. And we just had a retest to start selling. Remember, once we start the downtrend, what are we taking out? We are taking out the liquidity that happened while the uptrend was being created. And the liquidity is here. We're taking out these levels here. Taking out these levels here. Taking out these levels here. And finally, this. So that's the directional bias. So once we found our point of interest on the big time frames, we go to the smaller time frames and see if we can find opportunities or setups using our strategies. So many people have different strategies. There are people that trade off order blocks, people that use fair value gaps, people that use candlestick patterns, engulfing, spin bars and all that. But you can't use that if you don't know where the direction of the market is, where the market is headed, because you'll enter a setup thinking it's a good setup, and all of a sudden you're getting stopped out because you used your your A plus order block or your A plus engulfing, trying to buy in a downtrend, you have a small move on the upside, then you get taken out. So literally, you can see that Bitcoin last year in November, after the downtrend, started taking out all this liquidity. All this liquidity here, all this, and they're coming down for this, hopefully. So that is the direction, the directional bias. So what do we know now? We know that now we are bearish. So the first opportunity one would get would have been around this level here. So I'll go to the 4 hour to show you a clear picture of the directional bias. So we had a break here to confirm our bearish movement. We had a break here, and then price came to retest our neckline on the big time frame, which is the daily, even on the 4 hour. So what do we do here? This is where we come up with our strategies, different strategies. I'm not here to talk about the strategy I use on Bitcoin, but I'm talking about directional bias. And you can see that when I break it down and go to like the smaller time frames, like the 1 hour, I had an entry here. Where there was shift in the market, liquidity being created to be induced, and a POI around this level here, point of entry. And this market sold for 1 to 15. So someone who trades any strategy that is trying to buy this would think that, oh, we are bullish now, and they will buy here. They would buy here, trying to take this liquidity out. You haven't gone on the daily to see what is happening, so you'll buy thinking that this is your overall take profit. And guess what? The market will just stop here, then come down to take you out, because you don't know the direction where the market is headed. Directional bias is very important. The market can be in a bearish bias for a long time. It can even take months. So you can see that Bitcoin has been bearish from literally from, let me say, the all-time high, which was in October, but confirmations of the directional bias happened in November, and we're almost headed to Feb in the new year, and we're still bearish. You just have to find the best opportunities, basing on your strategy. I'm not teaching strategies here. I'm just talking about directional bias. The direction of the market will be so important to your trading. You'll catch setups that have little risk and more reward. So another setup I caught was a sell, because most people think I can go back to the daily and confirm this, because we had this consolidation here, this type of consolidation here, and maybe traders that are not familiar with the bias of the market of this Bitcoin would think that, oh, we are now headed on the bullish run since it's creating higher highs and higher lows. But no, I'm seeing this as a retracement back to a big time frame point of interest, which was this daily fair value gap. And once they tapped into that daily fair value gap, the sales continued. That is how you should treat directional bias. The only time that this bearish, the buyers are no longer in control, is when we have a shift to the upside. and that shift can't happen just because of this consolidation here. You should have a major shift in the market, whereby if price was creating a low, it has now created a high, and they haven't taken out this low, but stopped somewhere here and continue, something like that. That's when you know that, oh, the shift is now changing, and that immediately you don't take buys, you break it down to the smaller time frames and see where you can capitalize. So I was saying that on the daily, you can know that this was just a retracement back to the POI here. There's even liquidity to induce that. So the buy was on the 1 hour. The sell, sorry, because we are in a, oh, why am I even talking buys? Because never buy in a bearish market. So this is a 1 to 12. I'm not teaching strategy here, but you can see that this was a POI, or a point of entry here. And price came to respect it for 1 to 12, and the market has been bearish. So once you zoom out like this, let me use the 4 hour for more clarity. Once you zoom out, price has taken out all the liquidity that was created here. This was liquidity. All this was liquidity here. All this was liquidity taken out. All this was liquidity. So price has taken out all this, because one thing is for sure, as price is coming back for the retracement, it's creating liquidity. And then you who knows that directional bias will come to take out all that, all this liquidity here that is being formed. And that is the beauty of knowing directional bias. So there's nothing much to talk about when it comes to that. All you need to know is, am I shading the right direction? Have that rule in you that any setup I'm taking, whichever pair, I'm not selling in a bullish market, and I'm not short longing in a bearish market. Then you'll be good to go. So actually I have trades running on GU and Euro USD using directional bias, because this is the daily. This is the 4 hour. You can clearly see that once there was a shift in the market here, all these trades, once there was a shift, all this liquidity here is going to be taken out, and it has been. All this. Because right now the market is in a bullish what? Because the market is in a bullish format. And the trade I just took was on the daily, using the daily POI, whereby you know that you're in a bullish market. You're in a bullish market, and price has broken this. So this small order block here on the daily becomes a big POI to consider on the small time frames. And as you can see on the 1 hour, it has been respected, and this is already, it's a 1 to 7 trade. Why? Because I know the direction of the market. You don't want to sell any of this. You don't want to. You just need price to come back to your POI, get an opportunity, and take it with you to take out all this liquidity here. So that is basically it. Euro USD has the same trade, same kind of trade here. You're bullish. Once you're bullish, you're going to take out all this. You take out all this liquidity here. Don't try to sell because you think you're in a bearish market. No, go to the daily. See what the market has been doing over time. What has the market been doing? Are we creating higher highs and higher lows? Higher low, it's just a retracement, then a high. So you don't want to sell this unless you see a shift in the market. And that's how you'll catch nice setups if you know the direction of the market, if you're very conversant with it. You can let me know in the comments or anywhere. You can reach me out, and if you want to understand the liquidity concept and maybe a shift and the break of structures for you to catch setups like this. Yeah, thank you so much. Please, you can like, comment anything, and subscribe. I'll be giving you more videos on whatever you need. Peace.